Credit score bureau FICO in the hot seat lately after Bill Pulte, the director of the Federal Housing Finance Agency, took aim at the company in a barrage of posts on social media, saying in one, quote, FICO and other monopoly who has ripped off Americans for decades should not be using improper efforts to threaten regulators. The company's stock is down more than 20% so far this year. FICO CEO William Lansing joins us exclusively now. I mean, this has pressured your stock. First, he started attacking you on social media and then started making moves to allow for more competition. From your perspective, how did all this come about?
Well, I think the director is known as a man who moves quickly and likes to make decisions, and not at all surprising that he's trying to get something implemented because it's been a multi-year process. So that's not at all surprising. The so-called interim solution is full of issues, though. It's a fairly radical departure from the prior recommendation of the GSEs, and so I think that it needs, and I imagine that the FHFA will eventually have industry input to try to understand the implications.
His basic claim is that you're a monopoly. Is that true?
Well, we have large market share. That's true, and in almost all places where we sell scores, there's no mandate from the government. It's strictly it's a free market, and people choose our score. Why do they choose our score? Why is our score the industry standard? It's because the score is great value, and it does a great job of predicting the likelihood that a consumer will repay the debt. It's really the best system, and if you think about it, there is a lot of advantage from an efficiency standpoint to have an industry standard, to have a single score. As soon as you get into duplicate scores, you have to do duplicate modeling across the entire industry. And it's a very complicated industry, obviously, running from mortgage originators and brokers through lenders to the GSEs to ultimately the mortgage-backed securities investors. And so, having multiple scores knocking around in a system like that is not very efficient.
Has AI made the industry more competitive?
AI will eventually have a place in the industry, but right now it doesn't really comply with fair lending laws. AI is a bit of a black box, and regulators need to be able to understand why the decision was made and to explain to consumers if they don't get credit, if they're denied credit, or if they're denied an increase in their credit line, they need to be able to explain why, and AI doesn't do a great job of that. In the fullness of time, I imagine it'll be solved.
So on the competition story, now VantageScore 4.0, I guess, which is your competitor, mortgage lenders can use that to originate loans backed by Fannie and Freddie. How big of a deal is that for your business?
Well, to be determined. Vantage 4.0, which is what they're talking about, is not apples to apples with FICO Classic. FICO Classic used today is a 20-year-old score, and it's roughly comparable to Vantage 4.0. FICO's latest and greatest score is FICO 10T. That's the score that was approved by the FHFA and has not yet been implemented, but it was approved. And it is the most predictive score. I think that the GSE data and analysis would show that. We have a white paper on our website that explains the differences, but it's far more predictive. It's likely to result in 18% fewer credit defaults and probably score as many as 5% more people. So not score, but qualify as many as 5% more people. So
well, that's what I was going to ask. If you have a view on whether it makes the system less safe or more unsafe, if there are others in there that you claim don't do as good of work as you or as stringent of a process as you do when it comes to evaluating credit.
That's exactly the problem with lender choice, the so-called interim solution, because ultimately in half the market, the conforming market, the risk is borne by Fannie and Freddie and ultimately the U.S. taxpayer. And if you have two scores and lenders can choose, or consumers can choose, market participants can choose between two scores, you're going to have a race to the bottom. And we learned a lot in 2008, and I would hope that we wouldn't repeat it. If you create an incentive for shopping around to get the most lax score, you're going to get shopping around for the most lax score, and you're going to wind up with real safety and soundness threats to the system. And it's even deeper than that. The policy issue is that it encourages score providers to lower their credit standards. In a race to the bottom, you have score providers competing with each other on who can be more lax and score and qualify more people. And that's not something that's going to make the MBS market happy, and it's not going to make the U.S. taxpayer happy. And so there, real challenges with that.
Speaking of that, I wonder, there have been a lot of chatter about it, folding in crypto assets into your mortgage qualification process. Do you think does that happen, and is that helpful?
I don't think that's really happening right now. Could it happen in the future? Possibly. The volatility around those is a bit of a challenge.
The other item is we were just a long-term chart of your stock is a straight line up. And in fact, even on election week in November, you shot up another 10%, and then it got choppy. I wonder, did you anticipate the kind of pressure that Pulte in particular has brought about?
No, we certainly did not. I mean, we have a really great business. It's a very healthy business. And, over the last 68 years that our company's been in existence, we've become the industry standard, which is part of what drives our success. And I think that we expect that to continue. This is, I would call it a hiccup, and I'm sure we'll sort it out. This is, it is inconceivable to me that we're going to rattle and roil the mortgage industry with suboptimal solutions. So I imagine that the FHFA will wind up getting more industry input, following the Administrative Procedure Act, doing the things it needs to do to round this out, and we'll see where it ends.
But it all comes down to what the consumer's paying, ultimately. And I think one of the arguments for competition is that you can charge whatever you want if there's not competition. So ultimately, the way it goes beyond a hiccup is if you have multiple ways to get a credit score, what would that do to your pricing power and your growth?
Well, obviously, mortgage is not the only business we're in. But what I would point out is that we are the standard outside the conforming market. So, yes, the FHFA, the GSEs demand a FICO score for a conforming mortgage, but the non-conforming market is also completely standardized on FICO scores. And in fact, the non-conforming market, which is half of the mortgage market, is already adopting 10T very rapidly. I mean, we've done $300 billion in originations with 10T, and more people are testing and implementing it. So, I think that the industry wants the most predictive score, which is FICO 10T, and so I imagine that's where it's going to land. If it doesn't land there, then yes, it's going to raise rates and increase spreads, and that hurts consumers for sure.
Are you in touch with Mr. Pulte?
Oh yes.
You have a dialogue with him? Are you looking to settle something, make a deal? Try to
we'll
convince
see
him?
where it all goes.
All right, well, keep us posted. Thank you for joining us, though, to talk about some of the risks out there that you see and
Thank you so much.
How you're dealing with all this. William Lansing, the CEO of FICO.